here live, you'd like to get access to the tool, send us a direct message. You'll be connected to a member of our staff who can get you set up with access. And we'll drop one more link if you'd like a 30-day trial. These are not free trials, but if you'd like to pay for a small fee to pay for a 30-day trial of the Edge Finder, you can try it out. That fee does get credited towards your final purchase. If you'd like some information on that, we'll send a second link here, which will allow you to try the tool out. You just apply for a trial, and then we will get you set up with one there. So we'll drop that link here, and then we're good to go. Okay, guys, we're going to take a quick break, and then Chris Pulver's got the show from here, talking about a little bit of FX, talking a little bit of indices, commodities, all that good stuff. So stay tuned. We'll be right back with Chris just after this.
Hey everybody, how we doing? Happy Wednesday. Welcome back to another session. I've got some trades running on the SPX this morning. I'm keeping a close eye on those. Also, if interested, I threw in a trade on the SPY. There's a couple ways we can tackle this, but here's what I took. Went to the 18th, which is Friday, and I bought a 585. So right now, that's trading for about 77 cents. I got filled this morning at 71 cents. I was in a previous live session. Traders were able to get filled around like 65 or 66 cents. I'll show you why I'm in the trade. This is starting to get bigger and bigger to the upside. This is a gamma squeeze level at 995. When the market started today, it was trading around 949. It dipped a little bit, but now it's starting to increase. This is the most like standout level that I can see. So I'm not looking to necessarily see this get hit today, but if it does, that's great. That makes this trade even better. So I took the trade. I'll throw it in to, let's go. So it's a 1018. This is SPY. So a 1018 expiration, a 585 long call for about 75 cents debit. Okay, so I filled at 71 cents. I'm willing to take the full risk on the trade. So it's, it is what it is. My credit is going to be set for a credit of $1, I want to say $1.65 for profit target. Okay, that's based on the delta that we're currently seeing. So I will double check that right now. I'm going to double check my SPX positions because I did take that trade on the SPY. My strangle this morning is a little bit threatened on the call side. So I'm watching price pretty carefully. I just want to see that price is going to stay relatively quiet and not have I don't want to see like a big opening range breakout. So I'm trying to avoid that we get this big breakout to the upside. We still have some put option volume sentiment to the downside. I'd like to see a little bit more indecision here. So I'm thinking if we have another pullback for recenter, that's perfect for my SPX trades. If we start to breach and go higher, then I'm likely going to get out early and just let my long call do the rest of the work today. Okay, so we'll keep an eye on this one. Trade, what is this trading for? My 345. My 345 is trading for break even right now, and my 325 is trading upside down about 20 bucks. So I'm going to keep a close eye on this for the morning. Right, so I'll pop this up into another screen. Hopefully we don't see a major breakout. But if you're interested, I'll throw this in my Pulver alert section. So this is an index trade, and I'm putting on a SPY 1018 expiration, 585 long call, about a 75-cent debit. I filled at 71 cents debit. Profit target is price point 585, and I'm calculating the credit to be $1.65 pending close. So let's look to see if the SPY can get back, and it would be just a revisiting this efficiency here. So we have a little inefficiency. If the market's going to accumulate a little bit down here and then make a run towards that, that puts us up in a 584, 585. If price goes our way, that call option should increase in value. I'm happy with, 50% take profit is good. I'm going after just over 100% just based on the delta that I'm calculating now. So I'm looking to see if this trade will hit to 585. So let me put in a line at 585 right there. and I'll put a big fat arrow on here. So this is a SPY 1018 expiration, 585 long call, 75-cent debit. Profit target at 165 credit, or move stops to break even or better and trail. Okay, so that's the trade that I'm in. Little bonus trade. Here it is right there. And then see if we get a directional push. Now, it doesn't have to happen today, although if it happens today, I'm going to get paid a lot faster. But if it happens by tomorrow or by Friday, that should calculate to work out the same way. So putting that image in Telegram, not Telegram, the Discord channel for Pulver Alerts. And here we go. Okay, that's posted in the index trade section of my Pulver Alerts. All right, so that's that on the SPY 585. Going back to the SPX, keep an eye on that one this morning. Just trying to make sure that we don't have some convincing opening range breakout, which I'm going to be watching closely. A lot of times this will kind of establish itself through the 9:30 to 10:30 window. So if we have a little bit of a pullback and a recentering, that's good. I'm going to keep a close eye on that one. But that 585 is working out pretty nicely. I'm trying to think, what else can I do on that trade? I could look at a broken wing butterfly for right now, make it like a 1-to-1. Let me see. What's the expiration if I use the futures market? Okay. We're getting a slight breakout. We break even. I might end up taking a small break even or loss in this one. So I'm upside down about 345, trading at 390 right now. All right. So if I have any daily profit members in here, I'm going to assess the trade for the following reason. I'm upside down about $50 on my SPX this morning. If I let it go all the way to my stop loss, I'm going to lose about $345. If I cut it off right now and I still have the long call, I'd rather trade that for a direction. I think I'm going to do that. I'm going to take a small loss right now. So let me see if I can make this adjustment. So I'm going to take a view complex order. I might have to cancel one over the other. 435. So I'm going to micromanage this trade. So if I've got anybody, I'll put this on my Telegram and stuff too. All right. So trade 2 and trade 3 updates. Price is moving more directional. All right, I need to keep an eye on this one. So that's my credit. It's already upside down. My stop loss is at 690. But if I take the loss here, it's going to be closer to $200. I'm just going to let it marinate for a little bit longer. If it comes back down to less than $100, then I'll close it. If price continues directional, then I'll let the stop loss get hit. Okay. There's a nice rejection. That was a big drop. If you can see my numbers here, that just went from a $5, $5.30 debit to now a $4.60 debit. So I'm just going to keep, I don't know. I just got to watch it. This stuff is like super sensitive in the morning. If price were to come back down, so we had this little tiny breakout. If price were to pull back in any way to try to recenter, or what typically happens with price action in the morning is if we have a, break and then a retest, if that's enough to retest and kind of center my position again, then I should be able to get profit on that trade. But if I'm looking for the direction, I still like that trade towards 585. So I'm going to also add in, let me do this right now. I'm going to add in another trade. If I want to pair with that 585, I'm going to add in a 584 if it's cheap enough. A 584 is $1.24. I'm already up. I think we get there. All right, I'm going to throw in another trade here. So $1.20. See if I can get $1.20 on this one. So I'm going to buy a 584 to go with it and put in a take profit on that too. So try to get $1.20, $1.21. Get these going here. $1.21. Filled at $1.21. Okay, let's see how fast I can move here. $1.21. $1.21. That one is filled. This one's probably going to have to be $1.22. Come on now. $1.23, survey says. Oh boy. All right, I'm chasing this one up to $1.25 on that 584. Come on, you turd. All right, let's try $1.27. Phil, geesh, I had to chase that one up. Okay, a couple more. Same thing. Price is going a little bit more directional. $1.28 right now. Got filled. Okay, good. And similar to this final count. Good, good. Filled at $1.27. Okay, so in that, I'm going to edit that post that I just made in the Telegram. Edit. And I've got another trade adding another leg to it. SPY, 10/18 expiration. The 584 long call for $1.25 to $1.28 debit. Let me calculate the profit target on that one. Is price point 585, and I'm calculating the credit to be, survey says, that right now is a 32 delta, and we'd have to go about $4.20. So 585 minus 580.83, 417 at a 30 delta. I'm looking at $1.25 on top of the $1.25 that I made. So I'll go after like 240 to be safe. Pending close. Okay, so that is in. Now, the nice thing is I can set this up. And these trades are both in. So let me go back to my SPY position here. So SPY, here's my 10/18. Here's my 10/18. I paid 71 cents and $1.21 or $1.25 for this. I'm just going to go ahead and set both at a take profit of $1.65 and $2.40. That's a 305. I'm going to put it at $3. Okay, so here's how the results would work. If I paid 71 cents and I paid $1.25 and I close it out for $3, I make $1 for a contract, and I'm in 2 contracts. So I make 208. So I make $200 on the trade. Okay. All right. So I'm going to go ahead and set this close. Let's set this at $3 for both. I don't think I put in a credit order yet. So yeah, I'll put this at $3. And that trade is now pending. And I'll edit this message one more time in the Discord channel. For both trades, I'm setting a $3 credit to close both together. There you go. Okay, so that one is set for $3. Now we go into the next account, do the same thing here. Positions, there's my SPY. Close these out. $3 is fine. And same thing here. There are my 2 trades for Friday. Close it out for $3. So a little bit of trade management this morning, then I'll get into some analysis. Right here, $3. SPY 1, 2, close $3. Okay. Got one more account to do and then we're good. $3. Okay, so those are all sitting and pending. And then in this account, I've got the, this one's part of a call fly. I'll watch that one. This is my long call that I'm looking to close this one out for about $1.65. Okay, so that one's good. Based on the delta that I calculated this morning, if we get up there, that should be able to fill. That's a 71-cent debit to close out for $1.65. That's a pretty good return on capital. And then I've got a call fly as well that I'll be monitoring and watching. So, all right, for the day, see what happens if this is an opening range and we still have a little bit of indecision. That'd be fine. That'd actually be great because I still have 2 trades on the SPX I'd like to see profit. Total entry cost, your max risk. Yeah, exactly. So if I paid $1.25 for it, I'm willing to risk the entire $1.25. The other trade I paid 75 or 71 cents for, I'm willing to risk the entire amount. So that option either pays me or it expires worthless. It's that simple. Okay. All right. I was looking at my P&L on the day, up around 26K. I was looking to see where the big movers and shakers are. And surprisingly, if I go to my P&L on the day, Barclays is just a bunch of cash secured puts. I mean, it's a decent amount. I have depending on the P&L open, I mean, some of these are good for about 68% profit. I've got some open P&L, and I don't know if like the options have inflated a little bit, but I'm still just gonna keep these trades. I mean, these are 12s, 10s, 7s, and 9s. These are all puts, all puts. So I was willing to own Barclays when this thing was trading down here in the single digits. So I mean, if I look at the bigger time frame here on Barclays, this stock to me, especially in the banking world, if we are getting this breakout for the first time in years, really since like this is no joke, like this is 2008. If this for the first time in a long time is actually breaking the structure, there's some decent upside here to possibly back into the 20s. So, I mean, I just thought, well, if I can own some shares, I will. And right now, the price has moved high enough where, I'm 50 cents to $2.50 to $3 or $4 clear of my cash secured puts. And I might not get assigned on anything, but I'm still generating about $10,000 in gains by just having those puts. So if we go up to 20 plus bucks and I don't get any assignment or own the shares, so be it. But it ties up way less capital. Right. So anyway, that's a big little pop to the upside. IWM, the Russell's been doing pretty well. It's actually been outperforming the Nasdaq, up about $4,000 today. Uranium's made a nice little run. Bitcoin's doing pretty well. So let's have a look at those things. China stocks are doing all right. I'm going to take a look at JD this morning. So let's go down the list. Yesterday's price was a bit of a pullback. I mean, no big deal. It doesn't really change anything. We have some indecision on the week so far. We'll see if the market stays that way for the week or if it just keeps grinding higher. I don't know. I mean, you look at this as a snapshot now. It's like, oh, is this an evening star that's about to form? I don't know. By the end of this week, by Friday, maybe this is up and it's just another big weekly candle. Who knows? But price will do its thing. I still like pullbacks and dips and credit spreads on these the 50, the 100, the 200. If you were in the session with me yesterday and Nick was in the session, we did a little bonus session for a top trading strategy. We went for about an hour and 40 minutes. I thought it was a great session. I mean, I just talked kind of simple to more advanced. And I mean, index wise, it's like I'm looking for pullbacks to buy and add positions, especially to my core positions. I still think the market, one thing I found this morning was pretty interesting, is that the insider buying is some of the lowest that we've seen. I have a image of that right here. I'll show you. So we have higher interest rates. Mortgage applications. Oh, yeah, okay. Lower interest rates, higher interest rates take it away. Mortgage applications have dropped 17%. Wow, that's crazy. I mean, our 30-year has gone up quite a bit. We were down to 6.08. Now they're up to 6.32. Applications dropping like crazy. By the way, trade number 2 and 3 for my daily profit play. If anybody's in here watching that session, we should be looking a lot better on the trade now with price doing what it's doing. This is the trade out, or this is the image I was talking about this morning, right here. So this is corporate insider buys. We are at some pretty extreme lows. This is 2015. This is 2021 and 2022. This is current. The only thing they're trying to show here is after we see these lows, right, we tend to see a little bit of a top. Okay, a little bit of a top. And is it, going to do the same thing? That's a question mark, but it's possible. And, where has it been? I mean, this top took a while, right? And we were down here, tapping these lows for probably months. Same thing here. We tapped the low, we tapped the low. We still went much, much higher before it rolled over. So if we're just getting into this area, we could probably stay there for a while. This either extends a little bit more and then starts to roll over. So I wouldn't say that right now is, the top. It's more like I could see it rolling over sooner or later. But also notice that this didn't really do any major damage to the bigger picture. This still made all-time highs. So found it this morning. It's, like I said, it's interesting. That's about it. Okay. All right. Let me take a quick peek at SPX. This should be way helping out the trade. Trade number 2 is now back to profit. Trade number 3 is back to break even. So I think what I'm going to do here is I'm going to close out my SPX trades, trade 2 and trade 3. Both are back to break even or better. I'm going to close for small wins. Okay, so this trade, let me see if I can close this one out. If I cancel this, I got in for 345, it's trading for 335. It's going to take the break even or better. Is price coming back down to recenter a little bit? I want to prevent price from, I mean, I can't do it, but if price goes down a little bit, this should help my trade a lot. There we go. Come on, recenter, you turd. Now we got some quick profit coming. Come on. So if I cancel this and go back into this account to manage it, SPX 1, 2, 3, 4, close. I'm in for 345. Let's see if I can get out for 310, 315. Filled at 310. So that's a small winner there. And then the other trade, let me cancel this one. And also reissue. This was coming back to recenter. This is good. So SPX 1, 2, 3, 4. And close. We're trading at 3. Let me see if I get 310. I'll bump it up to 315. All right, filled. Okay. So that's 2 small wins. Let me update that one. So that's a daily profit play here. Trade 2 closed for I think that was 25 cents. That's a 35-cent winner per contract. Okay, we're good. So just taking care of that. I will keep an eye on this. I mean, I could monitor this and say, okay, I needed it to get down to 295. That was my initial take profit. And I'll keep an eye on this just to see if it does, because this essentially recentered my call side, which is what I wanted to see. But price is, a little bit more decisive right now, which is pretty volatile, right? You've got the put and call sentiment about equal, 49 and 40. You got price going up and pulling back. It's I don't know, a pretty violent morning, I suppose. So anyway, I'm glad to be out. Manage one winner, take 2 small wins on the others. That's fine. Time to move on to do other stuff. Okay, so SPX pulling back. It is what it is. Let's see what happens. Nasdaq has been underperforming, so we're down 0.4% already. There's some big news out of the semiconductor space yesterday. NVIDIA was down 5% at stock number 2 or 3 in the world, market cap wise. That drags a lot down, right? So let's have a look at those. Qs are down 0.45%. And we're still on the daily time frame. We're still back into, after yesterday's pullback. This could be, I don't know, this could be volatile, but maybe something like this. We'll keep an eye on this for maybe a potential broadening pattern. So I still mean this. Like, if we are able to pull back to like the 50, the 100 moving averages, I still like buying the dips as we go into election, post-election. But right now it's like the 50 is still a little bit lower, the 100 is a little bit lower, and the 200 obviously is a little bit lower. So I'm keeping an eye on those levels for right now. And the Dow is actually up on the day, not at all-time highs, but it's up on the day. The Russell is also, oh baby, Russell, nice stuff, man. Didn't think the Russell would have it in it to get to fresh highs today, but it does. This looks to be that continued rotation from large cap to small cap. Russell's had a great stretch here for the last 4 or 5 days. We are sitting around 5.5% to the upside. It's pretty good for an index. Yep. So up 1.4 today, clearly outshining its counterparts, which is nice. Volatility is still relatively quiet. SVXY, I'm hanging into this for a little bit longer. Dollar keeps melting up a little bit higher. Let me go back to the stream and catch some questions. Pushing the soft landing narrative, saying no landing at all. Yeah, I know. That's suspicious, right? Look, that's just setting up everyone for disappointment. Because all that's going to do is force all this greed in the markets, like, oh, the Fed's got this soft landing. I mean, that makes me even more cautious if the narrative is like we're going to be totally fine. If that makes the market complacent, there's nothing like a nasty 2, 3, 5% pullback to get everyone rattled again, and the market definitely has a way of doing that. Okay, that's correct. Yeah, Tasty does not charge for exits. I'm getting I'm paying about 60 cents a contract only. Yep. So if I'm in for those trades, I'm in for about $2.40. That's all it's going to cost me. We're also at extreme greed. Yes, that's correct. We took a look at that earlier this week. So that CNN fear and greed index. Also, let me look at the AAII sentiment again, which I know is also in the Edge Finder. We are sitting at 49.0% bullish as of 10/9. So I'm curious how this actually updates. If we update this week by like the 17th or 18th, are we sitting at 50 plus? Because the last time we had a 1-year high, we were at 52.9, and that was last December, which didn't necessarily turn the market sour, but we certainly did in July. It wasn't quite to 52.9, but once we pushed over that 50 period, or that 50 percentage, in July, we started to top out again. We started to roll over a little bit. We had that nasty correction from late July into early August. So just something to keep an eye on. Does it really derail the markets? Not necessarily. It's odd to see, the dollar continuing to melt up with the stock market also going to all-time highs. I think what we are definitely noticing, though, is there is some pretty hefty amounts of rotation from semiconductors into other places, and that's big money. I mean, I'm not saying people are dumping NVIDIA, because I don't know. I mean, NVIDIA to me is, I could see a bear call spread be a really easy trade here. Earnings isn't until the middle of November. I wonder what the premium is on NVIDIA. I hate to say I'm going to take a bear call spread in NVIDIA, because what fool would possibly sell NVIDIA right now? And all I'm doing is expressing a bearish trade, but it'd be a risk to find. But I also think that with this bar count that I see on the 200, we're over 470 bars, I believe. Now, I know that the price can do whatever it wants, but that is a big, big, big move away, 437 bars, and our stretch was about 43%. So I'm just saying it might be difficult to justify NVIDIA going higher, right? The news that came out yesterday of there's going to be, limited chips going to Persian Gulf countries. And if there's a reduction in what NVIDIA can do, then that obviously is taking a little bit of a short-term hold on the stock. So I would like to look, I'm happy to buy NVIDIA at a balanced price. And to me, that balanced price is $100 or less. Okay. That's where I think it is right now. So if I want to take a bear call spread on NVIDIA, let's have a look at it. I mean, the premiums are probably going to be mediocre. We have earnings on the 19th. So if I could get out of this before earnings, that'd be the 15th, which is a monthly expiration. The high that we just saw here is right around 140. So if I looked at a 140 call to sell and a 141 to sell, so if I sell the 140, buy the 141 for bear call spread, it's only giving me about 38 cents a contract. So I'd have to be comfortable risking $65 to make $35. The probability here, I mean, this is looking at about a $15 move. I mean, it's within the expected range, that is for sure. So essentially, I am calling the top, which I don't necessarily love doing, and probably not in my best interest to do so. So I think I'll just stay out of it. I'll let NVIDIA do its thing. Actually, one thing I wanted to price out today is TSM. Okay. TSM is Taiwan Semiconductors. They have earnings tomorrow morning. We're trading at 188.46. Let me take a look at this one for implied volatility. And let's see what the market maker move is projecting. So if I go to the 18th, we're looking at about a 950 move. The spreads are a little bit wider. They're 250 spreads, which I don't love. One thing I could do in the semiconductor space, and this might be easy to do like a low risk, high reward scenario, is I sell the premium. Let me do some math here. So TSM, let's go to option slam. Okay, so TSM. So we're averaging about a 6.63% move. I'll just rattle the numbers off here. 5.785, 6.41, 6.15, 6.7, 7.32, 6.38, 6.76, 7%, 6.63. I'm going to go slightly conservative and say what's a 0.065 move? So a 6.5% move at a stock that's trading at 188.56. That's about a $12 move. Okay, now the broker with the implied volatility at 64.3, the broker has an implied move by Friday to 937. If I go out to next week, now it's looking at about 1150 move, which is more along what I'm calculating for earnings. Okay, so I think what I'm going to do here is let me see if I can get a decent amount of premium. If I can sell the 187.50 and sell the 190, I can get $13 and change for this trade. And let's see if I can keep this within like a $15 to $20 window. So on the call side, if I go up $20 and I buy that, and I go from 190 down to 170 and I buy that, this would give me $12 of credit. My max loss would be $800 if price just blows through. Okay, price would have to blow through 207 or blow through 170. Now to the downside, 170 would be a drop of how many? How many percents? What percent? How many percents is this many? 170, that'd be about a 9.8% move. That is actually above everything we've seen over the last 10 earnings plays. Now, I want to take one more peek before I price this out and maybe take the trade. Go to post earnings. How many times did we actually get to 10%? Because I'm going to sell this. If I'm going to sell this option, I want to make sure we don't really go 10%. So we didn't get to 10. I'm doing this kind of the opposite of what I typically do. This got up to 8.5 or 8.15. This one that did get to 11% 3 days after and then faded back in. Not, I guess it closed outside of that. So that one didn't work. So this one's not what I want. This one works. 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 And this one works. Okay. So if I want to sell the premium, it looks like I can contain that price. And that's not a bad That's not a bad position. So if I look at this as, okay, I will sell the 187.50 call and I'll sell the 190 put, that gives me enough premium to kind of cover the expected move. I'm going to go out 20 bucks here. And this is basically what the trade means. As long as price does not blow through 202, okay? If it doesn't blow through 202 and it doesn't blow through let's say 175, then I can collect most of this premium right up front. And also, I'm doing this with earnings coming out tomorrow. I'm going to go out to next week to get a little bit more premium on the trade. Now, let's see something. I'm going to price out this. So this is $12 here. I'll put a pin in this one, and I'll take a picture of this. And I'm going to go and cut this back to the 18th. So if I take this and I go expiration to Friday, I can take the exact same trade with a move that's about $11 in premium. So I'm getting a little bit more risk than reward. If I go out to the 25th, I get a little bit more reward than risk. So I think I'm going to do that. All right, I'm going to take this trade. So this is an iron butterfly. I believe that's what it's called, where I'm selling the body and I'm buying the wings. And what I'm looking for is to make sure that price isn't going to move beyond my 207.50 or my 170. I want to keep price basically somewhere around this neutral. Okay. Now, what I want to look at one more time is, where is my volume? Where's my open interest? And I see a lot of open interest on the call side around this 200 to 195 level. And then on the put side, I see the big open interest around the 170, the 160. Those are way down there. But the higher ones, so we got a 180 and a 185. All right. I mean, there's risk in the trade. Let's see. If I collected $12 of credit, could I go after, let's see, this comes out tomorrow. There's no risk of assignment here. Actually, I mean, I suppose there is risk of assignment, because this is technically this and this creates a bear call spread, and this creates a bull put spread. It's just very wide. But the combo together is basically, I'm trying to say that price is going to stay range bound. Okay, this is going to stay range bound. And let me mark this. So if we go no higher than 20, about $200, what's that percentage wise? It's a 6.08% move. Oof. Maybe I'm not collecting enough premium on this. So it's outside the expected move, but for me to collect $12 in premium and cap this thing at this is a $20 move up and a $20 move down, I'd almost rather be seeing a little bit more premium here. So let me price this out slightly differently. If I buy the 190 and I buy the 187.50, I'm paying $11.45 for it. If I were to give it I'm looking at a move that should be around 6.5%, which is $12. Okay, so if I sell, let's say 15 wide. So if I buy the 190 and I sell the 205 and I buy the 187.50 and I go down to the 172.50, now I pay $8.80 for a move that should be going closer to $10 to $12 based on the expected move. Now, I just showed you the numbers here. Not very often have we actually gone to 6%. In fact, it was actually easier to be a seller on this trade. So, son of a bee, man. I think I like selling the guts. I like selling the guts, so I'm going to sell the in the money. I'm going to sell the in the money. I'm going to go up 20 bucks. And could I go out further? Could I go to the 210, the 215? Let's go to 217. That's $30 up. There's probably a lot more risk on this trade, though, by the way, which I'm going to confirm that. So 190 down to 160. Yeah, that's way more risk on the trade. So I will tighten that up a little bit more. Survey says, let's see, 190 to 170 and 187 to 207. So I kind of like this trade. All right, I'm going to take the trade. Stop talking about it. I think it looks good. I'm going to be a seller, and fingers crossed that we stay below. We need to stay below about 207. Okay, so I'll mark this out, put this in a box here. 207.50 to the upside, and 170 to the downside. Okay, so this is my neutral price right in here. And I'm selling the guts. So I'm selling the 187.50 call. I'm buying the 207.50 call. I'm selling the 190 put. And I'm buying the 170 put. So hopefully I get $12 credit. Looking for price to stay within the box. That'll be my trade I post on Discord for the Pulver alerts. All right. So 12 bucks. Looks like I can take the trade. And the nice thing here is there's, the max loss is if price is out here and stays out here, there's max loss. Okay. But if price goes up and then pulls back, I can see this $12 credit turn into, let's say, a $10 debit, an $8 debit, a $6 debit. I mean, I want to assess and see what price gives me right away. So this is earnings coming out, after market today. Let's see what happens. I know there's a lot of potential volatility around the semiconductor stuff. I guess my only concern is that if we have a big whiff in earnings, that this thing just absolutely dumps, and that's the risk I've got to be willing to take. All right. So I'm going to post this trade, and let's see if I can get 12 bucks for it. So let's go after it. So this is going to require about $800 in buying power. I would be happy on this trade if I collect $12 of credit. I would be happy closing this for a $10 debit, $9 debit, $8 debit, just going after a simple like percentage profit, like 25%, 50%, something like that would be pretty solid. But that's pretty much the mechanics I'll stick to. So let me see if I get 12 bucks for this trade. And let's go ahead and jump on it. So 12 bucks, survey says. Oh, come on, you dirty dog. $12, $11.99. Filled $11.99. Okay. Getting filled for $11.99. Okay, these are all getting filled. Okay, so I just want to double check these all got taken in at $11.99. 1, 2, 3, 4, 5, 6, 7. They did. Perfect. So I can add that in. This is going to be in the stock and options thread for my Pulver alerts. TSM 10/25 expiration. So I also go out to next week on the trade, and I am selling the 190 or the 187.50 call, buying the 207.50 call, selling the 190 put, and buying the 170 put. $11.99 credit. I will be happy with a $10 debit or less for profit target. Okay, and if you want to see this in a risk graph, this could be really nice just to spell it all out for you, and then I'll take a screenshot of the chart. Okay. And price.
Hey, Chris.
Hey, what's up, man? We got a bounce. Or you jumping in with me?
I'm joining you.
All right, cool. All right, so let me get this image here.
Taiwan semi.
Yep, TSM. I'm selling it. So I'm trading it just like it at Domino's. That was a pretty straightforward $500 I made on Domino's. So if I can make $200, $300, $400 on this one, per contract. I'd be pretty happy there. So that is in like Flynn. So yeah, I'm going a little bit in the money to sell. Let me build this out to show what it actually looks like. So right here, if I build this trade out, so this is TSM, and edit the spread, add my additional legs here. So I'm selling. This is the 25th, 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 25th. I sold the 187.50, and I bought the 207.50 right there. And then I sold the 190 put, and then I bought the 170 put.
You're selling it before earnings?
Yeah. So this
Why?
is this.
Why are you
'Cause I'm
selling
trying
semiconductors?
It's a neutral trade, dude. I'm looking to see if it stays range bound so I can collect the premium. We got a little iron
Oh.
butterfly action here. Yeah, so this is what it looks
Okay.
like. This is the trade. So basically, I keep all this profit if time decays. My risk is on the outskirts here, which is actually beyond a 1 standard deviation move. So the nice thing is where it is currently, this is pretty perfectly centered, provided that price doesn't have this blowout move one way or the other. We just kind of stay within this range. Then this $12 credit should quickly decay down to like 10 or 9 or 8, and I'll try to grab that profit tomorrow at the open. So that's very possible that tomorrow I could see this trade pay me $2, $3, $4 a contract if we don't have a big move. So if tomorrow opens and we open right around current price, all that IV that was built up for the earnings report might completely deflate and give me some quick profit tomorrow. Hopefully that's the case.
What
So
are your
we'll see.
thoughts on China?
I'm watching it. I'm watching it closely.
I remember
So-
you said that was the one concerning thing would be is if it corrected just as hard as it went up.
Yep. And so far it's showing it's actually showing some stability here, which I'm pretty happy with. Like the HSI stabilized. Alibaba is sitting here still around the 30% correction. What I'm liking about China right now, based on this hard correction, is that stabilizing right in here between the 30 and 50% is we have a rip, we have a little accumulation, and then we're going to try to retest the high. Realistically, if we get back to the highs, I'm probably going to do my best to close out a lot of these trades for profit. The only ones I might hang on to a little bit longer term would be Alibaba and Baidu, just because fundamentally that's essentially like trading the Amazon and the Google of China, which I'm okay with. JD is another one. I've got a $43 call for this week for an income play. I'll probably take a look at this one tomorrow or Friday to see if I do a quick roll. But Baidu, this one pulled back in a nasty way, man. Baidu is freaking volatile. This thing pulled back to the 618. So I definitely want to see this one try to not suck for the next month or so.
That's the one I'm in.
You're in. Me too. Yeah, I'm in it too. Well, the nice thing is some of my covered calls have pretty much become fully profitable. Let me check on those actually. Let's go to Baidu for a moment. Baidu, take a look at my positions here. Okay, so Baidu, I've got some covered calls. So right here, that's a covered call. It is around 76.6% of profit. This is around 81%, 81%, 80%. These are pretty big fills, though. I'm going to let these decay a little bit further. So I collected, $5 on a covered call, $4.96 on a covered call, $5.01, $4.45 on a covered call. I'm going to let these decay down to like probably less than 50 cents and try to get like 90+% of the profit on this before I consider rolling it or, working my cost down. I still own shares of Baidu around $85 to $87. So I'm actually in profit technically. So if this starts to correct, to the upside again, fine. I mean, if it gets called away at higher prices, fine. But I just want to keep an eye on this one to, lower my cost basis, see if it gets called away at higher highs. And then on JD, this one, if it gets back up to $43 by this week, I will make about $1. My break even's $41.63. So I'll make $1.37 per share. I've got 500 shares on JD, so that would be about $685 of profit. And that's by Friday. So that's an income play. The one that's going to get called away this week for me, more than likely, I would imagine this is going to hold true. So 685 on 500 shares. The other one that would be looking pretty good is Walgreens. This one had a big fat squeeze yesterday. We're trading at 1062. I have an income play on Walgreens where it gets called away at $8, and I keep the profit for 35 cents a share, but I'm in 1,000 shares. So I mean, it's $350 if it gets called away. Now, I want to see really quickly on Walgreens, Frank, if I can roll it in any way, shape, or form. I probably can't. But I could potentially increase the strike. Do I want to go out an extra week on this one? Let's find out. So if I go to Walgreens.
Are you bullish short term? Is that what you're saying?
Yeah, bullish short term. It was just an income play because it was so beat up and so oversold that I'm like, can we get from like $8 to $10? Well, it did that in a day. So the answer is yes. I want to see now if with this little breakout here, are we able to come back and try to find, the 200 EMA here? We come back to fill this gap at all. If we get to 1281 or 14 and change, I'm probably gonna be out of Walgreens altogether for a nice little win. So anyway,
I'm also in Baidu, but I have it at 89, so slightly higher than you.
Okay.
I own SoFi though at 670, so
okay, that's awesome, dude.
A good pump in price recently.
Yeah, it was. Yeah, I'm still hanging on to SoFi. I own this turd around like $7. So I've had this thing since basically we came back to support with the initial cost. I mean, this was a SPAC play, I believe. I don't know if it was an IPO or not. I think it was a SPAC play. But I bought this when it was around $10 and started to just work my options down to like sub 7. But yeah, I mean, I've had some losses along the way. Like I trimmed my position from like 1,000 shares down to about 500 shares. But yeah, I mean, so far so good. It'd be nice to see. I do think this is one company that would benefit from lower interest rates, which we're not necessarily seeing right now. The mortgage rates have gone up by about 20 basis points. So that's not cool. So here's your mortgage applications. So 6.08 was the low. We dipped up here or jumped up to 6.32. The Fed fund rate hanging here at 5.13 after, a 50 basis points cut. I thought we're supposed to be at 4.75 to 5%. It's trading at 5.13. The hell? What the Fed? What the Fed? So
yeah, that
anyway,
actually doesn't make any sense.
It's a little. I read this morning that the mortgage applications have dropped about 17% because of rates going up about 20 basis points. Pretty crazy, dude.
I don't know why that would be.
Well, it's just hasn't translated yet. I mean, I don't know what the market's hanging on to. Maybe it's like post-election. I have no idea. I don't know. It could just be like they're delayed right now. They're sticky. Okay, one more thing I want to check on Walgreens is, okay, so I've got this $8 call that likely price is going to get called away. If I were to move this up, if I do a roll and I move this up, so move it up 50 cents, it's going to cost me 50 cents. I move it up $1, it's going to cost me $1. So it makes 0 cents for me to roll this unless I go out further. And now if I move it up $1, I can only get 94 cents debit. So it's just not worth it. I think I'm kind of cooked on the position, dude. I'm not going to roll it okay, I can roll it out by 2 weeks and get 2 cents credit, Frank. I'm not going to do it. So looks like this is an income play. Walgreens is what it is. I'm going to get called away for the $8 strike price, and I'll make $350. And that's on, I think, 4 accounts. So I'll make a few dollars there. And then the other accounts that I have 2 accounts that are in this trade that are break evens in the low, like 12.50 zone. So that one, if we get up to like 14 or 15, I think I'm just going to take the profit, and that would be maybe $2,000 or $3,000 profit per account. So I'm going to see if Walgreens can, impress us. I think the reason the news jumped yesterday is, number one, earnings went up. Number two, they're closing like 1,200 stores. So the market's like, cool, you guys aren't going to suck anymore, and you're going to close down and try to get some additional profits and concentrate. Yeah. So if anybody goes to Walgreens or CVS and you got those power corners, I mean, it's the same store it's always been. I'm not saying it's a bad thing. When you're in a pinch, it's convenient. If you're ever in a random city, you can always find a Walgreens or CVS. I'm going to say find a Walgreens because I'm in the stock, obviously.
Their EPS is forecasted to be lower the next year, so okay. I think they're trying to do this as a cost-cutting strategy.
I mean, it makes sense, and they probably do. I was actually concerned. I mean, when it first started to drop, it's like, I thought from the defensive side, it would be okay. I mean, the fair market value on this thing is still pretty high. So if I go to Walgreens,
it's been in a downtrend since 2015.
oh, I know. Dude, it's not good. It's not good at all. And the dividend keeps getting slashed. It was, 11+%. Now it's 9.6. It's not well covered. They're going to keep changing this. But it's way below estimated value, forecast to grow with earnings. You're shutting doors. I mean, price to sales, price to earnings is just absolutely nothing. And fair market shows about $24. So, we've jumped from 8 to 10, and that's a pretty jump. Even if we make our way up into the teens, like, I'm not trying to hold on to this thing to $24 unless you're interested in buying it now, that you basically weathered the entire drawdown. But if anybody's been in Walgreens as a dividend play, you probably absolutely hate this stock because this thing went from, $97 down to frickin' $8. And you're like, oh, but it has dividends. How about those dividends at a 90% pullback? No, thank you. So obviously now is a pretty good bargain, but I'm not looking to hang on to this thing any longer than maybe 15 or 20 bucks. So
Do you want to look at the S&P?
I do. Yeah. What do you want to look at?
So I have a bull call spread or bull put spread. Sorry.
Bull put spread. Okay.
So I have it marked out on here. The top one's from yesterday, so we can get rid of that one. But this line is for today. I got an 815 by 810. So if it stays above 815, it'll work out. It's a 230 credit. But after yesterday, we got, I think I would count that as a dip. That was about 1%, I think.
It was 0.8%, right? Is that yesterday was about 0.8, 0.84 pullback?
The total move was 1.09%.
Oh, I gotcha. Yeah, you're right. Okay.
So I would say at a 1% pullback, it's a pretty good time, I guess. And if I'm wrong, I'm wrong. But
sure.
I think the bull put spread strategy is going to be okay in an uptrend. So that's what I'm doing for today. Hopefully the rest of the week won't be as red. But
yeah, how's your week been? I haven't seen you all week. What's been happening behind the scenes?
Well, yesterday I took a trade. I took another bull put spread, but it was at the highs.
Yep.
It was just below open, but it ended up being very wrong. So I took the full loss.
Okay.
And just doing it again. So far we're at I think we're at 11 trades. So I think I've had 2 losses.
Okay.
So we've got 9 winners, 2 losers. So,
are those 9 winners still covering everything?
Yep.
Okay.
And now that I've seen what a loss looks like, so it's like I'm going to try to go for $2 or more credit per day, so that when I'm wrong, I'm only losing $250 to $300 or something.
Right.
Because when you're right on a day and you're doing $1.20, you have to do a lot of those trades to make up for one loss.
Yep.
So if you keep it close to 250, odds are in your favor for upside. So I think I'm going to try to get around that price in the future.
Okay.
But still up, just not as up as I'd like to be.
Yeah, no, I get you. So if you're going for $2 credits, what let me look at a 0 DT right now. You're doing bull puts. What's an at the money? I mean, you're essentially doing at the monies then, right? If you're trying to get $2 in the morning.
Yeah, I try to get them either at open or below the open price.
Yeah,
but get it in the money, so not go below.
I gotcha. What if just throwing this out there, would you consider setting like, okay, let's just say this is the trade you're looking at 9:30, 9:35 in the morning. Would you consider this if we went 5 points lower? Let me change the color here. If we went, let's say the market opened right here and you put in your bull put spreads, you sell the 58.20, buy the 58.15. Right now it's offering $1.70. If price were to dip a little bit, would you just put in a limit order at $2 and be okay with that? Or you want to see it go greater than $2? Let the price come to you as opposed to settling for 175 credit. Just asking.
I mean, like I said, I would just go for. I want to go for higher premium now. So 170 is fine. That's been around what I've been doing at first, but I'm going to try to get higher premium. So whether it's a limit order or if I just take it, if I wait for the spread to get there and I just take a market order at 250, then I'll do
Gotcha.
that.
Okay.
I just like being in the twos now because I think
Yeah.
300 to 250 loss is more sustainable.
Sure.
Because ideally you want to be making more than you lose. And so I don't know. I think the risk involved there is less. Higher the premium, the less risk, in my opinion. Regardless of like the deltas and whatever, I'm just trying to get it to close above open price or at open price, and it'll be fine.
Okay.
So
I'm just doing the mechanics, like the numbers for you. If you had 8 winners, 2 losers, if you're collecting at least $1.50, it's not that bad, dude. I mean, if you had 8 winners out of 10, so you have 8 winners at $150, it makes you $1,200. You have 2 losers at $350, which would be that risk if you're 5 wide. You're losing $700 there. So you're still making, over the course of 10 trades, you're still netting $500. So that's with an 80% win rate. If you all of a sudden bump that up to, I'm not saying the win rate necessarily. I think it's going to be harder if you're getting, 7 winners. I think you can still make some money here. It's going to be close. 7 winners might be the spot you don't want to be at. So if we had 7 winners at 150, let's do the math there. So 7 times 150, that's going to be break even, right? That's going to be break even. Yeah. So if you have 7 out of 10, you're a break even trader if you're collecting 150. So if you switch that, like you said, to go, let's go 7 winners at 200 and 3 losers at 300. Now we have $1,400 in profit right there, and then we have $900 in losses. You're still making money, Frank.
so the strategy isn't different.
No, I know it's not, but
It's
I'm
just
saying
that
I lowered your win percentage, which is just helping you increase. I mean, I know you're watching price closely and we're in an uptrend, and I mean, you're going to be crafty on how you position for them. But the nice thing is you could maintain a what's 4 and 6. So 4 and 6. So you if you're 60% collecting $200 of premium, you're going to be break even. If you win 7 out of 10, you're making some pretty good cash. You're netting $500. Like, that's really good, dude.
no, it
So
is still good.
yeah.
It's just that instead of taking the $1.70 credit and then seeing the price come down and then seeing higher premium, I'm
Yep.
just kind of getting the higher premium at the same spot, just kind of waiting for it to get there.
That's why I was asking if you just set a limit order. If you want the higher premium, set the strike you want and just set the credit that you want and consider taking that trade versus, I mean, if you're watching it, that's fine. But I guess, are you watching it because if you go like, 210, 215, that
I'm
you want
watching it pretty
the higher
closely
fill? Yeah.
at the start of the day. That's
Yeah.
where I'm watching for the move, so I don't necessarily need a limit order.
Okay.
And actually, I mean, I do take a limit order every time. It's just at the price that it is at, so it usually fills immediately.
Gotcha.
So I'm watching really closely in the morning, waiting to get a price underneath the open, hopefully for close to $2. Ideally more than $2, but if it's 170 and I'm right, it's fine.
Okay.
But the idea is to just get under the open, and if it takes a huge dip in the morning, as soon as we open up, I feel like that's a better opportunity as well. Because then price doesn't necessarily have to close green, just has to close above that. So even on red days, you can be profitable, which I like. It's just on the big days where it's like a 1% drop, just not a profitable day. But on days where it closes flat or slightly higher or whatever, you make money. So I like this.
Yeah, man, I like it. And I mean, if you're liking it, you're making some cash with it. That's great. I mean, you said 9 for 11 roughly. You've had 11 trades, 2 losses. That's got to be doing all right. Especially if now you're pulling in, you're trying to pull in $2 of credit. That's obviously going to stack a little bit more of the the odds in your favor because you're batting, pretty high percentages, 80, 85, 90%. That's good. And yeah, I like it.
Yeah. I did a study on the weekly time frame as well.
Okay.
So we have a candlestick counter that we built.
Okay.
Just count green and red.
Yep.
And I took the last 100 weeks to the last 5,000 weeks on TradingView.
Okay.
64% of the time it's green, the last 100 weeks of trading. And then
So how
the,
so you're
the
taking
bigger
the last 2 years? 100 weeks of trading is 2 years, dude.
yeah.
So what's the number? Like, give me what's relevant to that then. You went 5,000 candles back, but the last 100 candles were green.
No, I went 100 and then I went 500, then I went 5,000.
Okay.
And these are all weekly candles. So
Yeah. So how? So give me the most history. Like how? What's the percentage of weekly green candles over like a 10, 20-year period?
I got 57%.
Okay.
The average of the time frames I took was 59% green.
Okay.
So if you
I
can
mean,
get
that's your
250,
that's your built-in edge, dude. I mean, the days, like every day in the market is about a 54% upside. Like 54% of the time we have green candles on the day, and I thought it was around 56% for weeklies, but you're saying 57% or so. The longer you go, it's like it probably gets closer, but I don't think traders appreciate how good that edge really is just to focus on being long-term bullish. Because if you went to a casino to play blackjack knowing that you have a 51% edge, if you're a professional player, you can make a fortune over a sample size of hundreds and hundreds of trades, thousands of trades, or bets for that matter, right? So that little edge is actually pretty nice. In a 54% daily or 56, 57% weekly, there's your edge. I don't know. It doesn't take much, but traders are like instant gratification is what we want. We want to make a fortune. We want to YOLO and make $1 million overnight. It's like, I mean, look, if you just give yourself time to trade this stuff, you don't have to lose a bunch of money. Just stay the course and remember what this market's trying to do in the long run, which is trying to go higher. So,
but in 2 years it was 64% green.
I know. Did you hear the numbers I rattled off yesterday?
No.
I looked back at the last like 20 some years. Where is it at here? Yeah. So the SPX averages, right? We know the S&P averages about 8% a year, going back like 80, 90 years. It averages about 8% a year. 2017, it pushed 20%. 2019 was up 29%. 2020 up 16% after a 30 to 40% pullback, by the way. So that's a huge rip in 2020. 2021 was up 27%. 2022 was a down year, about up minus 20. 2023 was plus 24%, and currently we're sitting up around 22 to 23%. So the point is, you just said the last couple of years, high percentage of weekly candles have been bullish. Well, the last 8 years, right? The last 7 out of 8 years, we've seen 2 to 3 times the average performance to the upside. Like this market is freaking juiced. Like this is a bullish market on steroids.
What was 2022 again?
Minus 20%.
Yeah, okay.
The way it finished the year, minus 20%. Yep.
But 1 year's minus 22%, the rest are like 16 to 25%.
16 to 27% upside. Yeah. So it's the same thing as taking, okay, that's 8. It'd be like taking 8 trades. So I have 8 trades. And I see some comments in here. I see the NAS and I see the pound. We can talk through those. Frank and I are just having a conversation. So if you have, let's say you go 8 trades.
I mean, we're kind of talking about the NAS right now. We're just talking about the market.
Yeah, I know. So we have winners. We have 7 with an average. We'll average those out. And then we have a loser at minus 20. Okay. But our winners, we have a 20, 29, 16, 27, 24, and 24. Okay. So if you just stack these up, it's like if it just take this as like I just took 8 trades and I have 1, 2, 3, 4, 5, 6 winners. Is that right? 1, 2, 3, 4, 5, 6. Oh, I forgot the 16 in there. 20, 29, 16, 27, 24, 24. Yeah, whatever. Good enough. 1, 2, 3, 4, 5,
So
6,
7
7.
trades.
Yeah, I guess it's 7 trades. Okay.
So 6
But
out of 7 are winners.
But if you stack these up, where it's like, what's 6 out of 7 win percentage? 85% of these trades, these years, 85% has been positive, and the net gain, I mean, just it's ridiculous. And what's funny is, like, anyone that got burned in 2022 is like, I don't know, I'm in cash. Dude, I had clients that wanted to just sit in cash and sit in money markets and sit in certificates of deposit for after, not during 2022, but after. And I'm like, look, man, I mean, I finished 2022 with like 19% gain in 2022 in a shitty year. And clients were still worried about everything. And they're just like, I just want to take my, I like my money market at 5%. I'm like, okay. And then I told them not to rub it in, but I'm like, you're probably going to see a good return in 2023. And what they do, they sat in cash, they sat with no risk, which is fine. I get it. But the market went up. What was 2023? 24%.
I mean, they're also not professional traders like you, so sitting on cash in 2022
But
is
I'm their trader.
outperforming the
That's my
market.
point. I was trading for them, and they made 19% in a bear market, and it wasn't good enough. It's just like, it baffles me, dude. So that's my
I
point.
see
I'm
what
just
you're
like,
saying.
the loss aversion and how powerful this sentiment stuff can be. It's like you're up 140% over a 6-year stretch, and you lose 20%, and you're like, I want to go to cash. You see my point? It's like, I'm just trying to show, like, loss aversion is so powerful that people see what's the saying where it's like, you want to see, you can't see the forest through the trees, right? So, like, right
Yeah.
now, this little lens, you see the 20% loss, you hear about the 20% loss, even though clients made money. It's like, wasn't good enough. It's like, okay, whatever, dude. So yeah, I just think it's an interesting phenomenon that loss aversion is very real, it's very powerful, and
Well, the fact
I
that
see it
you're
every
up
day.
19% in 2022 is really good.
Yeah, it's okay. I know it's okay. So, all right. Anyway, I see pound dollar. Let's go to that. Let's go pound dollar quickly. So the dollar index is still, ripping, not ripping. It's drifting higher, right? So you're seeing all your dollar crosses that are still dropping. I did analysis this week on the pound crosses, or the dollar pairs rather. To me, this dollar is still looking like, until it turns, this dollar looks like it's still able to go higher, right? I mean, this is such a perfect squeeze trade. I mean, this little bear trap down here and squeezing the way it's been squeezing. Don't call the top on the dollar right now, which means don't call the bottom on the pound dollar. I like this area for resistance. This to me is pulling back in this big inefficiency spot. So if we pull back into here, cool, right? If price proves that it's going to reject off that, then maybe we look for that to return back to the lows. But that's about the area that I look for dollar weakness if it confirms. If it doesn't, and it just gets up here and it stays here and it stays here, and it could be a bull flag or something, it might just melt up more. So don't call the top on the dollar. Don't call the bottom on the pound dollar. Look, the pound dollar to me is way more attractive. It's right here, Frank. You see this little inefficiency right there? I like that spot on the daily. I like this spot on the daily. I'd like to see this drift a little bit lower if possible. Try to come down here and grab some support, try to find some trend line support in this area, and then look for confirmation to then buy it and buy it nice and low, and then trade it back up to these inefficiencies. So that to me is a trade I'd look for. I'd look for like a 129, 128, 127 area. And if I get it, those are great for spots to buy, and then see if they come back up and find those pockets that were created on this way down with the dollar strength. So I'd wait. I don't know. I'd wait.
I like it.
I think there's good opportunities on the dollar pairs after the dollar's done doing its thing. But I think that confirmation is not ready yet. Same thing here on the euro dollar. Actually, in the top strategy session that I did yesterday, Nick chimed in, but we talked about this one, just talking about Forex trading and talking about trading pockets and inefficiencies. We're satisfying this inefficiency right here. This doesn't mean that I want to buy it right now. I'd rather see if the euro dollar can continue to come lower, right? Because if we start forming support, then this is the area I'd look for buys to then come back into the middle of this range, come back in. There wasn't really a ton of inefficiencies here, but I would say on the smaller time frames, let's go down to a 1 hour chart. And this is actually perfect here, Frank. Check this out. So in a couple, I would say this candle right here looks pretty promising for some type of inefficiency. So, and look, take a screenshot of this and see if this ends up going back to that yellow box that I drew around 110. It wouldn't surprise me is if you just wait for a second and wait for this structure to trade or break, it's done with the bear side, and maybe it's done here and it starts to go back up, or maybe it's done lower, but it starts to go back up. I mean, you could set this thing up for a trade that, if it's nowish and we go up to 110, there's 120 pips or so for that. If it comes down to, 108, there's 200 pips. We come down even lower towards the major support. We're talking about 350 pips of profit right there. Like, that's good potential on a little bit of confirmation. That's all. So yeah, I like that trade. If we break, I think that's a probable pocket to fill. If we fill this pocket entirely, look for this to be some type of manipulation here and some fake outs, and we start to break structure, we go back up. Just be patient on the stuff. Traders have to pick their trades, wisely and carefully. And this is using a lot of price action and structure. Aussie dollar, see that request coming in too. This is spot on here, man. Look at this Aussie dollar. This, Frank, I couldn't ask for a better pocket right here. That trade right there on Aussie dollar. So what do I want to trade? Do I want to buy Aussie dollar right now? Absolutely not. You know why? Because if there's a chance this thing can come down to this low, okay, then maybe you look for a bounce in here. Otherwise, I wouldn't buy this thing until we come back down to like 165 or 164.50. And the nice thing is that's my pocket. That's my liquidity area. That's my efficiency area. And so it can come down here, take out this low, pattern out here, and then work its way back up. Or it comes all the way down here, patterns out at the bottom, and then works its way back up. So patience. There's nothing to do. If you sold it, you saw resistance. You sell it high, it's going your way. But now that we created this, eventually price is going to come back to that level. Whether it's this level support or this level support, we're likely coming back to this 68 to 68.50 zone. But don't force these trades and this is what happens. Traders see this pocket and they get all excited. They start buying right away. They start buying it here. It's like, why are you buying there? Look at this low, and it's called sweeps and it's called block chains or order chains or whatever the hell people call it now. Look, to me, it's efficiency and inefficiency. It's structure. It's support resistance. I'm old school, I guess. But it's the same thing. It's just price action. So if we come down here and we poke these lows and then we start to show some promise, then yeah, you can take a stab at that one and go back up and put your stop loss in, when it's appropriate, when price is actually going higher. Otherwise, if I zoom out, I just like bigger picture, man. Bigger picture, zoom out. This to me is a much easier trade. I don't even have to worry about the Aussie dollar until we're coming down to an attractive level. Okay. But if it trades back into that yellow zone that I put on the 1 hour chart, okay, fine. It's just in the mess. It's in the mess of the middle. But if it comes down to this level, it's way more attractive here to buy that thing nice and low. And so to me, I hope we get it. I hope we go back to 64, 63, 62, because I'll buy it like crazy. So anyway, just a couple tidbits from, what we talked about yesterday with price action.
I think it's interesting that the dollar is up. So is Bitcoin and gold.
I know that is pretty wild, right?
I'm happy that Bitcoin's up.
Me too.
I'm glad it broke that trend line as well. This was a huge obstacle that it got over, and hopefully it keeps going. I have this vertical spread from 20 to 29 by March of next year. And I'm glad I took a longer time frame because I took this back in honestly, I think I took it in either June or July.
Okay.
So this was a $9 move for a $1.80 debit. So if it comes back above 29 by March, I'll have the max profit. But right now it's still in drawdown. I'm at 114. Got at 180, so I'm down about 36% on it. But hopefully Bitcoin keeps running higher. Did you have any plays on this? I remember talking to you about Bitcoin.
Right here. I've got it on my screen. So I have a 16 and a 15 put that I'm willing to own some shares. If they don't get a sign that's an income play, If they do get assigned, I'm going to own the shares at 13.85. I also did a, in the money, like a pretty deep in the money long call. It was like an 80 to 85 delta. So I did an in the money long call for $5, and we're trading at 19.37. So right now, this should be profitable. I mean, I'm not interested in taking profit. What I'm looking for is does BITO from now until 2026, does this get back up to these highs at $33 to $34? So I could take a $5 debit, turn this into, let's say, a $20 credit, and take out my $5. I make $15. So $15 credit. I paid $5 for it. That's a pretty good return on capital. That's my trade. So that's about that's a $3,000 profit per account. That'll be about 24 grand if I get that right for right now. So that's my play. It's like this one is out to the end of the year, which is looking good for income for about $350. And I don't think I just did one contract. I think I did more. Let me find out. Let me check on some BITO. And I also have a lot of income plays on MicroStrategy too. So BITO is in here. So I've got the let's see, that's a naked put at 20. And what is that? Oh, I did a long call at 23. Okay. So I got a long call here at 23 that's upside down about $700. And then the other one. So my BITO positions outside of ownership. I mean, if I lose on this $23 call, I took this trade as a leap. I did it like January of this year. I went out for a leap. Bitcoin obviously hasn't made a run like it has, but if we get to the end of the year and Bitcoin's up to fresh all-time highs at 80, 85, momentum carries up to 100, I'm curious what this looks like. Just to maybe, even if that $23 call becomes break even, and then I have put, and I have the long call here, and I also own the shares. My trade price is around, geez, oh, Pete, I bought this thing at 28.50. Ugh. Okay. Well, I'm going to wait on it a little bit.
BITO.
Yeah, it maybe, I think did I buy it at, I'm going to have to look at my history. I think I dollar cost averaged then for 100 shares. So it should be slightly lower than that, but I'll confirm. And then also on IBIT.
It has a great dividend though. I think it was like 40%.
Yeah, I'm not trading for a dividend though. I mean, IBIT, I'm up $1,300 on this account. So this one I bought 300 shares. It shows a cost base of 34. It should be lower than that based on, so I did 100 on IBIT. So it's going to be close. But either way, it's like I have exposure in Bitcoin. It's BITO, it's IBIT, it's MSTR, and I don't have the Bitcoin futures market. I mean, this is I don't think it really is as liquid or as good as what I want it to be, because I've tried to take credit spreads on /BTC, and it's pretty trashy, dude. Like, we only have 3 expirations here for Tasty Trade, and so I'm just not doing anything on Bitcoin futures. It's just not enough expirations. It's not as liquid as I want it to be. Like, I could take gold and silver. I'm trading those all the time. But yeah, Bitcoin futures, Ethereum futures, I'm staying out of those. So I'm just sticking with those ETFs. And you can also just do crypto, like Zero Hash is the platform or the exchange that gives you crypto, and it doesn't cost anything. If you want to buy crypto in Tasty Trade's platform, it's a 0 commission purchase, which is pretty impressive. So, and they've said many times on their Tasty Live network that most traders are not selling Bitcoin. They're listening to Michael Saylor. Don't sell your Bitcoin, right? So anyway, I hope it go up. I mean, it'd be, look, this is one thing, just kind of the overall optimism in the market is if Bitcoin goes to all-time highs and it makes another big bullish run to 100K or 125 or whatever it stretches to be, I do think Bitcoin is an equalizer for a lot of investors out there. If you're a wealthy investor that have a little bit of exposure in Bitcoin, okay, fine, that's alpha, right? That's generating some extra returns with a low risk. But if you're a person that's taken, hard-earned savings of, $5,000, $10,000, or everything you possibly have, and you put it into Bitcoin, I know it's a huge gamble, but I hope that it pays out for those people that have, decided to take that trade. I mean, I think the asymmetry and the upside is tremendous. I know that somebody that's like, I'm all in on Bitcoin, and you have no rhyme or reason for it. It's not really a calculated risk. It's just, I hope it goes up. That's not a trade, but I'm not going to, kind of crap on that trade. Like, I want Bitcoin to go higher for people that have been behind the 8 ball and have been, not invested in years and years and years of missing out. I would love to see Bitcoin offer this kind of equalizer type gain where it just crushes the S&P 500 and you get, 50, 100, 150, 200% on your money. That's awesome to get some wealth accumulated pretty quickly. So again, I'm optimistic for that reason. I hope it pays out for a lot of people. It boosts their bottom line, and also to pair that, I hope that people that come into a lot of money with crypto are also willing to spend some time and learn how to manage that money. Case in point, do you remember the Dogecoin millionaire guy that traded, $180,000 of borrowed money and family money and turned it into like $3 or $4 million and then lost it all, and then he's back up to $1 million now because we actually resumed a bit of a trend, all in freaking Dogecoin. And he had like some big influences out there like Andre Jick and Graham Stephan that like literally went to him in person and just said, dude, you need to consider what you can do with this capital by investing it, by trading it. And he just stuck with his I'm Dogecoin millionaire. It's like, that to me is insane, but lead a horse to water. Don't have to drink it.
Yeah. At least he made something, I guess. Or he hasn't made anything. He's still,
I don't know if he's closed it out or not. And the fact that he's still in Dogecoin it drives me crazy, dude. And he's probably in other stuff too. I think my mouse is gonna go dead. Doge USD. I haven't even looked at this. Okay, now's your chance, Frank. We can buy it at 12 cents. We going up to 22 cents.
I had my trade with Doge.
You did? That's a 77% upside. All right. Frank, I think my mouse is going to die. You want anything else? We've been going for a moment. That's cool.
No,
what else you got?
I guess gold. Gold can be the last thing we look at.
Okay.
That got away from me again.
Well, I mean, dude, don't say that. It's like it didn't even pull back. This isn't a pullback, right? I mean, look, gold. This is what I'm looking at on gold. I'm just going to take this box right here, copy and paste it, and see if gold will respond to this. Like, it's not getting away from you. It's just not doing anything. I'm hoping that gold is just going to do this. Stay in this range, and we see if the market catches up. Like, let's just see if like dynamic support catches up to it. I'm not taking this as, oh, it ran away from me. It's like, it is what it is, dude. I'll see if gold dips. That's all. No big deal.
It ran away from us.
Okay.
Now, I'm sure like we'll get another pullback, but currently it's running away.
Yeah, I mean, it's back to all-time highs, but it's not blown through the highs. So I'd say there's still a chance. And silver is doing the same thing. Like, silver's not running away. It's up, but it's not breaking recent highs. So yeah, we're potentially range bound on both. So I keep a close eye on them. But yeah, I mean, if we break away, it's like, okay, then you can tell Frank, if we're up to 2,700 plus, then you can say silver got away or gold got away from me. But if we stay in this range, you cannot say that. Okay. But the nice thing is gold and silver still outperforming the markets this year, which is not traditionally and historically a good sign. Because usually that means that like there's crap happening, there's inflation, there's geopolitical concerns, people are wanting to migrate into this like safety store value thing. But man, it's an interesting dynamic to see gold outperforming the broad market, which is still up 20+%. I mean, we had an impressive run in the S&P, and gold's like, yeah, we're gonna go double that. Bitcoin's still up over 100% for the year, I think. You got some stocks out there doing the same thing, but overall, that's what makes a market. There's winners and losers. So, cool.
We need a 5% drop in gold.
We do. Let's get it. Let's have it happen during the election so we can buy the dip. Look, man, I've got cash at the ready. I don't know, but I'm pretty sure you do too. I got some cash at the ready that if something wild happens, I mean, today's another all-time high in the portfolio. Pretty happy with that. Big day. I mean, this is a big P&L day. I mean, usually I see if I get like 20 to 25K swings, that's pretty encouraging. I'm up $30,000 today. But I've got lots and lots of buying power. Even if it's a cash account, I've got $695,000 to basically deploy. I'm still waiting for some good opportunities to deploy it. And we'll see what those opportunities look like. But if Bitcoin still has a nice little bump by the end of the year, if silver and gold still continue to grind for the rest of the year, that's another nice chunk to my portfolio. Obviously, watching my levels closely, probably taking some very inexpensive hedges with broken wing butterflies here and there. But I'm not trying to be like overly timey with the market. It's like I want to hedge out through the election, hedge out to the rest of the year, and just be willing to pay like inexpensive. If I make $1,000 on a hedge per account and I risk like $100 or $200, it's worth it. But we've seen this market shrug off a lot of things, and it's going to be an interesting way to finish the year, man. Yield wise, like we're still in the disinverted stage. Bonds and yields, your yields are down, so bonds are up, right? That's a good thing. So yields are coming down slightly. Look at your the 2-year. That's barely moving. The 10-year is dropping a little bit harder, which I like, but I'm not liking the structure on the 10-year, man. I think this could be stickier, and we may not see the 10-year back down below 3.59%, which is going to suck for mortgages. It's going to suck for everything with long-term financing. It's going to suck for restructuring debt. If the Fed cuts by another 100 basis points, or I should say 50 basis points by the end of the year, and mortgage rates don't freaking budge, it's like that's not going to be good. We might still have a stalemate in the housing market where people just know that above 6%, like they can't afford to buy houses, or they shouldn't. And we're seeing more delinquencies on auto payments. We're seeing all sorts of stuff happen under the hood. I'm not bearish though. It's like just trade.
What could cause mortgage rates to fall then? Like, what would it have to be steeper cuts than what we already have? Or
no, it should just be that, if the Fed is going to cut by another 50 basis points, we should see somewhere like 50 to 100 basis points coming off the top. I think the issue is, some of these things make moves before, right? Here's the 30-year. Some of these moves make it before. Like, look at this. This was, what is this? This is 2023. The market started to look at, okay, the Fed's going to start cutting in 2024, right? The market was anticipating so many cuts right up front, and the market pushed it back. So I think that this as well is just as subject to the buy the rumor, sell the news as everything else. We saw the bond market do it, and we saw the mortgage rates do it. The market was anticipating that rates would come down, right? And so the market started to behave that way, but we went from 7.8% down to 6%. Now I'm hoping that this gets more in line with what is closer to the Fed funds rate minus your bank margins, right? You're not going to get a mortgage at the Fed funds rate if we're trading at 4.25 or 4.5 or 4%. You're not going to see your 30-year sitting right there. Your bank is going to build in their buffer, and they're going to build in their margin somewhere, and it's probably going to be close to like 50 basis points to 100 basis points in margin. So just consider that. So if the Fed's sitting at low 4s, then I'd hope that the real mortgage rates for buyers out there would be maybe like low 5s. And if you want to spend a little bit, you can buy it down. My goal with the house that I'm closing in April would be that if rates are down into the mid 5s or low 5s, that I buy it down to maybe sub 5. Doesn't make a big difference overall, but it's like if I was able to save, $300 to $500 a month, I'll do it. And then if price drops a ton and we get like severe cuts in mortgage rates, like if we're back under 4%, if I get, a percent of savings, I'll probably refi. I hate refining, but I'll probably do it, just because it
what
saves
about a variable?
No, I'm not. You know how many Canadians have variable rates? They're going to get absolutely screwed on that when they end up going from, Canada had like 1% mortgages that have variable rates that are now about to restructure at like 5 to 6 to 7%.
Yeah, but this is at 7%. Now we can, if you take a variable, the expectation that mortgage rates are coming down.
I don't know, man. That makes me pretty uncomfortable.
You'd rather be fixed at 6 or 5% and then refinance in a couple of years or something?
If I get it fixed at low 5s and I refi at low 4s, look at a mortgage calculator. That does change it quite a bit. So for every, I think 50 basis points, you're saving like $300 a month. For every 1%, it's like $500 or $600 a month. It's like, that makes a big difference to budgets, And obviously my goal is I'm going to try to put in, 1 or 2 more payments a year just to stay ahead and trying to tap tame that principal. Like I want to tap into the principal. I want to tame the interest rate. So I try to add like 1 or 2 more mortgage payments a year.
Okay.
So, but yeah, variable, no thanks. I just, because what if, right? What if, heaven forbid, let's say we go into a Volcker situation where Powell's only way out of inflation is we jack up rates to 6%. And the Fed completely FUBARs this whole situation, right? We got to 5.5%. We start trimming, and then inflation goes crazy. And they're just like, you know what? Screw it. Back up to 5.5%. Well, mortgage rates are going to jump up to 6+%, 7+%, 8+%. I don't want to be on the hook for a variable. It's like, if I establish a mortgage, I don't want that to ever increase. I mean, we're already losing purchasing power every single year. We're going to oblivion when it comes to debt. I mean, we lifted the debt ceiling. When was that? 1 or 2 years ago? And it's already added like $6 or $7 trillion to our national debt. So it's like, when's the last time you heard about a debt ceiling debate? That's like, the final hours of Congress having to get together and pat themselves on the back and look, we decided it's okay. We'll lift the debt ceiling. It's like they always do it. So
it's always such a crisis.
Now there's no
scenario.
ceiling. There's no debt ceiling anymore. That's basically what's happening right now.
Yeah. But it always ends up fine for now, I guess.
Yep. Conscious, I see your question there. Tasty FX is my broker, formerly IG. I was with Oanda for a long time. I rolled over to Tasty FX because of my relationship with Tasty Trade, managing accounts, and I've got some pretty good terms with my Tasty FX platform. So yeah, I'm with Tasty FX. If you want to trade, so one thing that's pretty nice about them is they do offer some pretty good volume rebates. They also have very low spreads and commissions. And if you are trading with their web platform, they also offer non-FIFO trading. So the same stuff that I had, the same reason I was with Oanda was because of non-FIFO trading. If you use their web platform, you can trade non-FIFO. So that's pretty good. Okay.
All right,
man. Frank, I'll see you tomorrow. It's been nice to have you pop in, dude. Good to hang out today.
Yeah, it's fun. Long talk.
This one going for this is what 3 hours straight for me. So what's that?
I bet you got more to
it
go
for 50 minutes. Yeah, I got a meeting after this, and I got 3 more sessions today. Ain't no thing.
Yeah.
So all right, have a good day, man. Thanks everybody. We'll see you soon.
Yeah, thank you.
All right, bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.